Investors, good morning. Welcome back to another TipRanks webinar. If you are joining us for your very first webinar, my name is Ari Gutman. I am a customer success manager here at TipRanks. I have the opportunity every single week to jump into webinars like this with all of you, our investor community, to go over briefly our economic backdrop, and then moreover dive into a TipRanks featured tool or highlightable tool of the week, a tool that perhaps would allow us to better invest regardless of the economic environment, but more importantly, factoring in those economic backdrops. The big question always comes about is which tools should we be using on TipRanks, or perhaps which tools aren't we using on TipRanks, because there are so many investment tools that we have. So these webinars are, of course, designed to help you invest more wisely by picking up the right tools at the right time, and of course, having all the tools in our investment toolbox at our disposal. So without further ado, I want to go over just briefly our economic backdrop, kind of what's been happening in the market as we take a bit more of that macro approach, and then zoom into this week specifically to see what's on the docket for us, our agenda for the week ahead. And then we're going to roll out into trying our best to look a little bit more into the future, say the next 3 months, 6 months out, as we all should be doing as investors. Of course, that's what smart money, hedge funds, institutional investors, they're constantly trying to do, is paint that economic backdrop to look into the future, paint it as best as they can to begin to look into the right sectors, and then moreover into the right stocks. Last but not least, we're going to close up shop today with our TipRanks tool of the week. So first and foremost, I think it's been across the board. I hope everybody knows that it's been earnings season. There's been a ton of momentum out there in the market. A lot of market participants were incredibly excited. We saw a lot of momentum investing. So we had this bullish run to kickstart us into this earnings season. And as of last week, end of last week, we lost about 2 to 3% there in the market. Now, a lot of that, of course, is coming off the fact of it's a lot of emotional investing, as I always like to say on these webinars. Now, emotional investing is when we're not really keeping our eyes on that economic backdrop, and we're really just investing because we're seeing a lot of excitement, a lot of momentum. Of course, just before earnings season, we had a ton of momentum when it came to AI and tech. And I think all in all, what we saw, that little 2 to 3% sell-off, was not a surprise to me. I was actually waiting for that little sell-off to happen. And it's almost like the bubble pops and our economic reality is back in our face. And so I'm not too surprised at what happened. And now kind of rolling into this week, some things that we should be well aware of as investors. Not a whole lot of economic activity coming about this week, but just a few reports to just keep your eyes on, keep your ears open for. You'll see them in the headlines most likely, but we do have retail sales, a retail sales report coming out tomorrow. I think on Tuesday, the biggest report there on the week that we have in front of us is actually going to be the FOMC meeting minutes from the last FOMC meeting. Now that's going to be incredibly important to do your best to try to analyze, pick up the keynotes there from, I'm sure it will be in news headlines and articles, because you're going to want to try your best to understand how the Federal Reserve is going to move forward with interest rate hikes, if they do move forward with interest rate hikes. Of course, we have economists and investors across the spectrum predicting or trying their best to predict the outcome here of the next FOMC meeting. Will there be another interest rate hike, or will there not be? Now, a lot of investors say there will, and a lot of investors say perhaps not. There might be a hold, and just seeing how the interest rate hikes thus far have been doing for us. And then last but not least, an important report every single week that the Federal Reserve certainly keeps their eyes on, the initial jobless claims. Those are rolling every single Thursday. Now, for me as an investor, what I'm looking at, as again, I'm going to highlight this here, the FOMC meeting minutes and the Federal Reserve, because even though inflation has been coming down, which is fantastic. We've been waiting, I think, for inflation to come down now for quite some time, talking about years in the making here, as inflation was sky high. And now we're down to 3.2% as of our latest inflationary reading there, the CPI report that came out last week. Now, with inflation coming down, exciting, good news. but it's not necessarily the war turning point, if you will, right? Like the war has not yet been won as to say that we're now in some type of bull market or entry into a bull market. I think right now, specifically, we're at a very interesting time, right? Unprecedented has been a word that we've used time and time again, I think for the last 3 years or so, but it is a great word to use, an unprecedented time, because we really are in this type of Goldilocks situation that we've been in now for a couple of weeks, right? We've been watching inflation come down. We've been watching the Federal Reserve come out very hawkish. But on the flip side of that coin, the labor market has remained very robust and stocks have been really soaring for the most part, as to say that they're performing quite well. Now, the big question that we've been asking ourselves for quite some time has been, well, when does this, right, take a downturn? When does this market take a downturn? Because with interest rates rising, that should be the case. However, what we've been seeing is stocks are on the run. The labor market, again, remains incredibly robust. Now, we do have, again, those economists that are out there and a lot of market participants who are sharing it's just a matter of time. Now, I certainly am in that camp, and I'd love to throw it out actually to all of you. If you have an input or opinion on whether or not we could see an economic downturn in the coming months, please feel free to type out your thoughts there in the chat. It is an open chat for all of you to utilize, and certainly after the webinars, when I'm able to dive into the chat and see what everyone's thinking, it's always interesting. Now, my opinion here, and a lot of economists out there are thinking along the same lines, is that in due time, right, come perhaps the end of 2023 and into 2024, we could certainly see that economic downturn. Now, Jerome Powell, as of now 2 FOMC meetings ago, had shared with us that there could be a downturn. In that particular speech that he gave, he did use the word significant. Now, I certainly have been waiting to see a downturn of some sort. And I've been saying, if you've been on these webinars with me, probably for the last 2-3 months worth of webinars, right, we'll probably get that downturn at the end of the year. And it's really going to take interest rates elevated for a prolonged period of time. And then it becomes this survival of the fittest type of environment that investors in businesses would really be trying to survive in. Now, I want to go ahead and share my screen with all of you. I did take some snippets of some clips that I wanted to share with you, because it's one thing to hear it right here from me at TipRanks, but I wanted to throw it out to some of the experts that are out there. So bear with me as I share my screen with all of you.
I do think that in the short term, the market is poised for a correction, because seasonally, September is one of the weakest months of the year in the stock markets. And the S&P 500 has just had the best first 7 months of the year since 1997. So a correction is definitely on the cards.
And I've been talking about this the last couple of times in the show, is, August to October, I have a little bit of fear we have a pullback. And I don't think it's going to derail the overall rally. I think we could finish the year at record highs. But I want to be prepared for that pullback, trimmed a little bit, and kind of we'll get ready for that.
So we obviously impressive strength since the October 14th low of last autumn, which is in many ways almost as impressive as the preceding sell-off. We know that global equities peaked on 4 January 2022, and S&P drops 27%, NASDAQ 100 drops 37%. And then since that October low, we've been recovering. The market, as in any instance, whether you're going up or down, is always characterized, or most always characterized, by counter trend moves. So on the way down, that 27% decline, we had these very important counter trend moves, these sharp rallies, which gave way to new lows. Well, so too, from the low of October 14th to where we are now, we've had 2 very distinct counter trend moves, sell-offs.
I'm going to pop back on the screen with all of you. As mentioned, those were some of the experts out there in their fields, right, talking about what we could expect come the end of the year. A lot of them are mentioning, right, from August to October, we could see that downturn. Now, it's interesting to note that I really want to say that throughout the last 6 months to a year, a lot of experts have been coming, even, that includes Jamie Dimon, right, coming to the table and saying that we could have an economic hurricane. And then we haven't been seeing, right, this downturn. And so a lot of investors could either shoulder that off and just say, it's probably not going to happen. And then there's the camp, right, where it's better to play it safe rather than be sorry. And that's just to say, be prepared for the worst, but still plan for the best. And that's kind of the approach that I take as an investor, right? To just be prepared for the worst, but also plan for the best, which means don't stop investing because there could be a potential for an economic downturn, right, in the near future or come the next 3 months, 6 months, but just begin to prepare yourself, right, to actually invest within that type of environment. Now, with that type of script that we're investing with, it becomes, where do we look? What sectors do we look into? What businesses do we look into? Now, I want to share this with all of you, and I've shared it before in previous webinars, but we really do, as investors, have to stick to criteria. Now, for me as an investor, I like to stick to 3 main pieces of criteria, and it's regardless of any type of economic environment. When I'm looking to invest into particular stocks, it's always going to come down to businesses that have great leadership teams, right? Excellent management. Number 2, businesses that have great brand names, very reputable companies. And last but not least, and most importantly, out of all the criteria, is a clean balance sheet. Because a company with a clean balance sheet, right, little to no debt if possible, are going to be the companies that are most likely going to fare far better off in the midst of volatility. Now, should we see this economic downturn come to the end of the year, it seems like through a lot of my reading from different reports, whether it's hedge fund managers pumping out their articles, economists that are giving way to their insights, it seems like the downturn possibility would not be a colossal recession or even really classified as a recession. It would more likely be a minor downturn here. So perhaps 5 to 15% is what I've been hearing a lot of those economists and market participants who are speaking of a downturn predicting. And again, those are predictions, so it really could be anybody's game. Your word can be just as good as their word, but it is important to take that economic backdrop of ours, apply it, right, to the next 3 months, 6 months out, become empowered investors, doing our due diligence and painting that picture for ourselves. So that environment that we could very well be living in, if we get another interest rate hike, or if we don't get another interest rate hike, interest rates themselves will still be elevated. Even though inflation is coming down, that means there's still going to be an impact on both consumers, all of us, investors, again, all of us, and businesses. So again, that question, where are we investing? What sectors are we looking into? What stocks should we be looking into? Most importantly here, the stock ideas. Where are we going to get them? So I'm going to go ahead and share my screen with all of you once more. So we're going to find ourselves here on TipRanks. And I want to share with you that from what I've seen, whether it's talking to and engaging with investors across our TipRanks community, which I do so by a lot of our customer experience sessions, which if you'd like a customer experience session, again, utilize that chat box for me. But what I've seen in a lot of those talks, what I've heard in a lot of those talks, is investors really have like 5 to 10 stocks that they really run with at any given time. So if it's not a hot period for that stock, or perhaps it's not a time to buy that stock, a lot of investors are just waiting. Now, again, it's all about having time in the market instead of trying to time the market. And it's always good to at least understand the new stock ideas that you can be adding to a stock watch list and not just running with, say, your core 5 stocks, because getting that fresh blood, right, those new stocks into your portfolio will allow for you to continue to maximize profits, right? It doesn't mean that you're going to hold on to these stocks forever. It's certainly going to come down to the strategy that you're deploying, but it's always important to have those fresh new stock ideas, right? If we're a Buffett type of investor or if we're a day trading type of investor, right? Either which way, Warren Buffett is always looking for good opportunities, as are the day traders who are out there. So now we're on TipRanks, and we have a lot of these tools that we're going to use for stock ideas. Now, my job here is very simple, and it's to show you all through TipRanks a little bit of how I use TipRanks to find these stock ideas. But again, an underutilized area on TipRanks in which not a lot of us are using for stock ideas is actually right here underneath experts. So we can see if I hover over experts, I get this nice drop down. I can go to my experts, top financial bloggers, top performing corporate insiders, top hedge fund managers, top research firms, and last but not least, there are top individual investors. Now we may be asking ourselves right here, well, how are we going to use that information to help us with stock ideas? And there's really two places here in this drop down I want to take you today in this webinar. The first one is actually going to be top performing corporate insiders. So I want to give that a click. We're going to get this drop down now here, and we can scroll down. So these are, of course, the top performing corporate insiders. Now, if you've been on these webinars with me, you'll know that I absolutely love insiders and hedge funds. I love understanding what insiders are doing simply because when insiders are making moves, they're the closest to the CEO, the CTO, the CFO. They're the closest to the stakeholders, right? They are the stakeholders. They are the C-suite. And so when they are making these investment decisions, a lot of the times they have that information, that quintessential information at their fingertips that I don't have right on my desk, that I can't analyze because I'm not the insider. And so we can use these insiders to our advantage. Now, these are, by way of this list, the top insiders. That would be those who are performing right to the best of the best. And we can see here Carl Icahn. I'm sure we're all well aware of Carl Icahn right at the top here. Now, when I'm looking at this list at a glance, right, not a lot of stock ideas that I'm going to get from this list. It really is just telling me, again, the top insiders. But here's the key, is if we click on Carl Icahn, we now get a good understanding of what stocks, what positions are in his portfolio. Now, with the trick here of using our experts, it's going to take a little bit more digging, right? So it's not going to be your very first stock. You can get this drop down here, and it means it's a stock that we should buy because Mr. Carl Icahn has it in his portfolio there. But what we could be doing, right, on a week-to-week basis or a day-to-day basis, if we're scavenging for new stock ideas, is coming to a page like this, and we can come over to any one of his positions, and this is a good one to take a look at, right? Because we have Southwest Gas here. We have Carl Icahn with a success rate on of 8 out of 8 profitable transactions on it. Average return, a little over what the market would return per average on year here, so 7.94%. Now, what I love about this is I can see that he's been buying it up. I can go to year out and see his last buy here has been on June 23rd, right? But I can use this now to go further into Southwest Gas. So right from Carl Icahn's page to the Southwest Gas stock analysis page, see how it's been performing on the year. Begin to take a look at my TipRanks tools now, what I like to call at a glance. So a TipRanks smart score of a 9. And we all know if we're using TipRanks for a good period of time, that an 8, 9, or a 10 is a great smart score, meaning the stock has a higher likelihood of outperforming the market over the longer period of time, say 12 months out. So I like that it's a smart score of a 9. But just a tool at a glance, as I always like to say, I want to double down on that. That tool, right, the smart score tool, it could change that number within a few weeks because there's a lot of factors that go into that tool. So we can scroll down and see, yep, hedge funds have been increasing their holdings as of last quarter. We have those insider transactions that have taken place. We can even look into what the masses have been doing. So we can go into what the top investors or all investors across TipRanks have been doing. Even they have been adding to the position here and within the last 30 days. So I'm not going to do a ton, right, of due diligence here with you all now, but I wanted to show you through what that would look like utilizing a tool on TipRanks from our top experts drop down. Now I want to brush over to our experts drop down one more time and go to top hedge fund managers. Because again, now we have our list of top hedge fund managers, smart money as we would call them, making a lot of money moves, right, quarter to quarter. Now we can jump into, say, Nelson Peltz here, scroll down, and we have a list of all of his holdings. And if we're looking for some new stock ideas, what we may want to do or be interested in doing, right, is coming over to where Nelson Peltz, his hedge fund, has added to or started a new position in some of these stocks. Now we can click down on the General Electric drop down. We can see when they last bought here, so March 31st, 2023. But again, if he's been adding to his position here, we can click over to General Electric. Now, very interesting to note, as we're seeing General Electric here, I want to say about a month ago, General Electric was actually one of the stocks that showed up in our top stocks page. So here we go. This would be right in line with when Nelson Peltz was actually in the midst of buying more shares worth of it. We'll jump over to stock analysis and see how this one has been performing. So year to date, up 73%. TipRanks Smart Score of a 10. As I mentioned, we looked at General Electric together as investors about a month or something change ago from our top analyst stocks page. And so here we are again with General Electric now. It was added to Nelson Peltz's hedge fund, but again, a stock idea that we can now run with and do our due diligence on. Now, what it all really comes down to, and I'll join you on the screen once again here, is generating stock ideas, not just running with the same stocks, your same core 5 to 10 stocks on a day-to-day or week-to-week or month-to-month basis, getting some new stocks, new stock ideas in your mind on your stock watch list so you can actually generate some revenue. But the whole idea comes down to finding those stock ideas where the insiders are going, what the hedge funds are doing, and then of course, doing your own due diligence from there, pegging that against what your economic backdrop could be. Does it all make sense to you as an investor? Now, investors, I want to leave you with one final message here. I am very excited. On September 18th, I have just secured an insider to come and join us here on a webinar. September 18th, I want all of you to write that date down on your calendar because we are going to have an analyst right here with us to talk about the state of the market, talk about how he analyzes stocks, what he's interested in, right? What sectors he is looking into as we speak. So September 18th, we have an analyst who will be joining us. And moving forward, we're going to have a nice analyst series who are going to be joining us every now and then on these webinars for our premium and ultimate users. But with this first one, I'm so excited to have this analyst on with us that I wanted to open it up to all users. Basic, right, premium, and ultimate will all be on the same day on September 18th. With that being said, happy investing, investors. Have a smooth week ahead of yourselves. Keep your eyes on those FOMC meeting minutes. I look forward to seeing you all back next week as hopefully a premium or ultimate user. Until then, thank you very much.